Hey there. This is my first live stream attempt on YouTube. So, learn something every day, huh? This is a mortgage update. I am in the mortgage business, as some of my videos have seen, and some of my subscribers know. Anyway, wanted to just kind of show you what's going on in the market and how the coronavirus has changed our world a little bit and give you some advice. So, I will start out showing you last 30 days of bond price movement. So prices go up, rates come down, vice versa. Prices go down, rates go up. Green is good, red is bad for rates. So you see, we're chugging along, and the world decides that the coronavirus is a real thing, and that's going to be bad for the economy, which is good for rates. And then we realize, oh my gosh, it's going to be much worse than we thought. We have a terrible week, and then the Fed makes their announcement on Sunday that they're dropping rates to zero. That helped on Monday, but the following week, prices fell again. Rates went up. We were up at this crazy Thursday right here. We were up one point into the mid fours on a 30-year fixed normal rate, where normally today we're in the low threes. Anyway, after that point, we come back. The world thinks that we're going to do the stimulus package. Things settle down a little bit, and here we are, the last week. These 5 days of just continued improvement, really. And we're just super low rates today. Wanted to then show you a longer snapshot. So let's get rid of that one. What do you think of this new software? Pretty cool, huh? And let me get down small. There we go. So here we are. This is the last 12 months. So you can see most of the last year rates were improving, leveled out in the fall, late fall, and this year started out, things were getting better. And then here we go, boing, boing, boing. Super volatility in the last couple of weeks. So that gives you an idea of what is normal movement in a day. And here is what we've had the last few days. So, or last couple of weeks. So crazy time indeed. What does that mean for the mortgage world? Let me get this thing. Okay. So with the new, shelter at home rules that are sweeping the country, appraisers on purchase and refinance transactions, they still have to get into the home most times. So we'll have to deal with that. If there's a seller that doesn't want people trooping through their home, we'll have to figure out how to ease their anxiety about that. Wet signatures. We still need borrowers to sign and sellers to sign documents in front of a notary at closing. So very few lenders are technologically advanced to get around that one. I have heard of people doing closings outdoors now. We can send a notary to people's homes. So there's some semi-solutions, but still it's something that has to happen. The next thing, income verified. We still have to make sure the people that we're doing loans for are employed at the income that they said they were employed or they were making. So we verify a few days before closing by calling the HR department of the company or the manager of the company. So if you're a borrower in process, you need to make sure that you know who the lender should be calling for. If the HR department is no longer in the office, they're now sheltered at home and they don't have access to everything, that could be an issue. So we need to solve that problem before we get there. Different things. Well, the swings in mortgage rates are just tremendous, and a consumer could get a quote one day and feel confident that the rate's going to be there tomorrow, and it might not be there tomorrow, or it might be better tomorrow. So lots of volatility. If you're going to shop mortgage lenders, I would certainly do it all within the same day and even within a couple hours if you can. But lenders are super swamped, so it's going to be difficult getting people to communicate. Impact on lenders. So lots of turmoil, lots of people that locked at this rate and they're halfway through the process and the new market rates are this low. So those people are saying, I'm not going to go through this. I'm going to start over here with this lender. So that's a problem with that lenders are experiencing fallout on their lock pipeline. And just a lot of expense in trying to manage a locked pipeline, especially when rates could be 1.1% swings or 1.5% swings within that pipeline. Income stability. So think about people that own a home that bought it within a couple of years of today. They're having a hard time making ends meet, and then they just lose their job. So servicers of loans are having an issue, they're going to have a policy and a plan for dealing with people that can't make their payments. They're also responsible for passing on those payments to whoever owns the bond that mortgage is a part of. So there's a cash crunch for servicers, if I can say that correctly. And the income stability of people that are in process. So you might think you have a loan in process and the guy works for a big company, so he's safe. Well, big companies are laying off people too. So this 3 million first-time jobs claims number was just amazingly large. So and lenders are having problems. So lenders are not only having problems because of the pipeline, but because of the cash issues. They need to have cash to hedge their or to be able to have a warehouse line to fund loans. A lot of lenders have a limited warehouse line, so they're full of loans and they won't be able to fund more than what that warehouse limit was or is. So that's an issue. Some lenders are pulling back on funding loans. Some lenders are pulling back on products. A lot of non-QM, which are basically things like fix and flips and bank statement loans and all those kind of things. Those are being pulled back from lenders. I've heard lenders stopping doing jumbo loans. I've heard of and then the big news last week was that Quicken and Loan Depot have stopped. You can tell me if I'm saying this wrong. They have stopped locking refinance loans until that loan is clear to close. So if you're a consumer, why would you start a loan today that your loan won't be clear to close for 2 months? So basically what they're saying is slow down on the refinances. So those are some of the things we're going on in our world. If you have any questions, there's my contact information. I love this software, by the way. It's called BeLive TV. And look at this cool thing you can do. Look at that, little banner at the bottom. Hey, if I can help answer any questions, help you with a mortgage question or a mortgage quote, feel free to share. And hey, subscribe too. That's a big deal on YouTube, right? Okay, bye.